Okay, into this video, I wanted to go over this how credit card pricing works and the things that you might want to think about when it comes to purchasing a Clover or any other point of sale system for your business. And this is strictly pricing. It's not talking about the features and benefits. We might talk about it a little bit, but this is some things you should know. So one thing, just to know how credit card processing works, is it's a couple steps. So if you're the customer, you come in the store, your merchant, you have your Clover, they pay for it. At night, when it's time to batch it, um, the store's Clover will send a message to the processor, like myself or a bank or any other independent sales organization. They'll get the money and then they communicate between Visa and your card issuer, and then they'll deposit the money into the merchant or the store's bank. And then at the end of the month, you'll get a credit card bill, and the cycle continues. So, one thing to note is when you do less than $1 million in transactions, you deal with a processor. And if you do more than $1 million, you can do it with Mastercard and Visa. And usually this is a month, and the numbers might change from here and there. But larger companies like Walmart and Target, they get to deal directly with Mastercard and Visa. And usually small businesses, they deal with processors. One thing always that I like that people know is the Durbin Amendment. So, quick story. Target and Walmart, they felt like the interchange rates were too high. So interchange is the rates that MasterCard and Visa charges to process credit cards. And so they went to Congress and they said, oh, the rate's too high. And so they lowered the rates. So the good news is that the rates got lowered. But the bad news is that a lot of these processors and banks, or I should say more the opportunity is these processing banks, they they got their rates lowered, but they haven't lowered the rates of a lot of businesses. So there's a big gap of money and profit that that the merchant can save, and then also the opportunity for independent sales organizations like mine to help you save some money and make money at the same time. One quick rule of thumb that we can do even without looking at your statement. I mean, it's kind of hard because a lot of times people tell you one thing and you look at the statements another. But this is a general rule of thumb. If you can't, because I know these statements are kind of crazy, if you just take the amount of fees over the amount that you process, you'll find your effective rate. So if your fees are $2,000 and you process $50,000 worth of stuff, then your effective rate be 4%. This one other thing to rate is that this in your fees, it might not include your software and your hardware fees in that statement. So you just want to just look out for that. So there's three different ways they typically do pricing. There's interchange plus, their flat rate pricing, and cash discount. First one, let's talk about the interchange plus. So with interchange plus, there's around 400 interchange fees, and and depending on if you're a grocery store or you're a restaurant or you're an auto mechanic, you might have a different interchange fee. And so usually what happens is if you're a small business, usually there's an interchange fee that MasterCard, that's just the cost of what it costs to do business. And whoever your processor is, the bank or whatever, they'll put that fee on top of it. And then also sometimes they'll do per transaction because each transaction costs uh, a few pennies. So if you have big volume, more likely you'll have a rate closer to interchange with the markups not as much. If you don't have that volume, then a lot of times that you get a higher rate because it's a higher risk to taking it, and a lot of times to for someone to do business with you, they have to make enough money for it to make sense. It wouldn't make sense if they're charging you close to interchange rate and they're only making $20 a month. It's just not gonna make sense to them. The next one is a flat rate price. So with flat rates, this is how it sounds. A good thing about flat rate is this. Let's say you have a certain amount and you you agree that your rate is going to be $500 every month, regardless of how much volume you do. If you do your average volume that justifies that $100, and you know that you don't really have any slow times, then flat may be a good option for you. But the more money you make, the lower your effective rate is. The less money you make, then the higher it's going to be. So this, of course, you want to make money, but that could be the pros and cons of that. The thing that's the most popular right now is the cash discount. So a lot of times, just in my example I had before, you have this $2,000 fee, and and you got to pay all $2,000 of it. So one thing you can do, this with the price of food going up and it's hard to get employees more than ever, and this the cost of everything going up. You just want to find another way that you can save some bread. And so one thing you can do is do a cash discount. Pass the fee on to the customer. So instead of you paying $2,000 a month, you can add maybe $1 onto each customer's transaction. So like, for example, I have right here, let's see, the customer's ticket's $25 and you're doing a cash discount of 4%. That's going to add $1 onto the customer's fee, and that's no cost to you. So instead of you paying $2, you're asking your customers to support the business and pay $1. But let's just say out of the month you have 200 customers and you have 3 or 4 people complain. That's $3 or $4 compared to $2,000. And this based off of that simple math, as long as you don't have a big ticket item, and even sometimes if people do, they do it. And worst comes to worst, you can always go back to other structure plan. But this will help pay someone's salary or help you buy some new equipment for it, just to help alleviate some of the credit card fees. So what one should I pick? I mean, it really depends. The Interchange Plus is, if you're gonna pay the fee, a lot of times people choose the Interchange Plus. The flat rate, I mean, depending on your volume and if it makes sense to you and the merchant, then then you can do it. But you just have to make sure you have consistent revenue for that to make sense for you. And then the cash discount, you basically pass 90 to 95% of the fees onto the customer, and it's a huge savings. One other thing to be mindful of is there's a processing fee that, based on your transaction, but you actually have to have hardware that you have. And so they have the point of sale. So regardless if you get a Clover Dual or Flex or a small one, you're going to have to pick that. And then you have a KDS system if you need to use that to go to the kitchen, or you can use a printer as well. A lot of times, you have an option. You can either pay for it up front or you can get a lease. And so if you pay for it up front, it's a 1-year warranty on the POS. And so if anything happens after that, then you have to buy a whole completely new one. The one I usually tell people is this for the peace of mind, just in case something happens. I know we can be able to update this machine, and so you don't have to pay the upfront cost, and you have a monthly payment. And then as long as your agreement, you're in the agreement, then if anything happens with the machine, you'll be able to get a new one. Another thing too, is the software fees. So depending on what kind of business that you have, is going to depend on what service that you're going to use. Most popular one that I have is this counter service for restaurants. So they pay the $60 a month. They have the online ordering, and then they have the inventory that you put in. You can put everything in that you need. And then any additional device, so no matter if it's a Clover Flex or Dual, then, or whatever the case may be, you're gonna have to pay extra 20 cents. If you just want to run transactions and accept payments, and they have a 0 per month plan. But a lot of times people want to put the inventory, so this is a plan that a lot of people suggest, so you can put your inventory in and have everything. But if you're really in the crunch, you can do it per $0 a month. So you don't have to sign a contract a lot of times. You can. It might give you a more favorable rate, but if you want to have that peace of mind that you don't want to sign a contract in case something happens, you don't necessarily need to. The lease on the machine is a different thing, but if you want to get out of contract, there's a way for you to get out of it. So this in summary, just look out for the rate structure. Um, Either if it's interchange plus, flat rate, or cash discount, look at your hardware fees and your software fees. And that's one thing: your hardware fees and software fees might come separately than what you see in your processing statement, and most likely will. If you have any questions, you can leave a comment or you can send me an email and I can answer a question and would love to review your statement. Regardless if there's savings or not, I'll be able to let you know if you have a fair deal or not. You have a great day. Thanks for listening, and hopefully talk to you soon.